for people to be able to get that expertise. So there's a lot of different things that you need to know as a startup or a small business or any size of business, but particularly startup or a small business as you get going. And while there's a lot of things to know, there's not always resources or the ability to know who to contact or who to reach out or how to interact or engage with that. So the Inventive webinar series is really intended to be that place where you can tune in, get some different expertise, hear from the experts, hear from those that are for the different industries so that you can have those skill sets or at least have the network to make sure that you're successful. And so today we have another great presenter on the webinar series today, and Andy, and I'm not even going to try and tackle his last name. I'm going to let him do so. But Andy's going to present a little bit on knowing your numbers as a business. And now, for those of you that may be a Shark Tank fans, which I am, I think if I haven't watched all of the Shark Tank episodes, I've watched almost all of them. And one of the things they always hit on is knowing your numbers. And the knowing your numbers as a business is important because that's how you know if you're profitable, how you can increase profitability. Are you going to go bankrupt next month, or are you going to knock it out of the park, and a lot of other things. And so I'm really excited for to hear from an expert in the industry with Andy. And so we're going to turn it over to him. He'll do a quick introduction and then also go through his presentation on a little bit more of knowing your numbers. And so with that much as a quick introduction and to kick things off, welcome on to the webinar series, Andy.
Thank you so much, Devin. Really appreciate it. And thank you for that introduction. Yes, first and foremost, I'm going to do just a little about myself. I started my firm, Accounting Solutions, just about 6 years ago now. We don't do any year-end prep. We literally work with entrepreneurs and business owners on a monthly reoccurring basis. And I grew up around entrepreneurship my whole life, and I always saw a gap that most entrepreneurs and business owners work with accountants only once a year, and that's during tax season. And I thought that was quite backwards. You should be in tune with your numbers on a monthly basis as an entrepreneur. So with that, I'm going to present why knowing your numbers as a business owner is important. So give me a second to share my screen. All right. So one thing I love to tell all my clients is if you don't know your numbers, you don't know your business. I joke and I say that that's going to be on my tombstone one day. You can make the best donut in town, but if you don't know your margins on that donut, then you're just a great baker and not a great business owner. The significance of knowing your numbers starts with decision making. As a small business owner, we tend to let the business run us rather than us running the business. So knowing your numbers will help you make strategic decisions to move you in the right direction. Right? Not knowing your financials, that's the income statement, balance sheet, and cash flow, is like playing a sport without a scoreboard. The score allows the team and the coach to make a decision if they need to play for a comeback or hold the lead. For instance, if you have employees and or contractors, you should understand the expense of that expense and how much does that make up of your revenue. Then how does that move with increases or decreases of revenue? This will help you decide, do you need to make cuts within your staff, or do you need to hire more people? Next is financial health. Your financial statements will help you determine your overall health of your business, right? Are you profitable? Are you trending in the right direction? Are you reviewing your P&L on a monthly, quarterly, and annual basis? Do you have a budget that you are keeping yourself, like holding yourself a standard to, right? And are you hitting budget? Are you going over budget on some items, and why? And is it justifiable? What is your break even on a monthly basis, quarterly basis, annual basis? Especially as a startup, you should be knowing your break even. Do your assets outweigh your liabilities? Ultimately, you want to build equity in your business, right? So your assets should outweigh your liabilities. And then cash flow, right? Are you net cash positive? That cash flow is a big one. So being in tune with your numbers will help you identify trends, analyze performance, and pinpoint areas for improvement. This could be in times of good or bad, right? Let's say your business is booming and you have multiple channels of advertising. right? You should know your ROI on those because you could turn off what's not working and double down, triple down on what is. Next is working with outside parties. As a business owner, you're going to be working with a lot of outside parties, right? And this is not limited to, but tax preparers, banks, private lenders, investors, large client contracts, and obviously Uncle Sam and state and federal agencies. Businesses who effectively communicate their finance, demonstrate transparency and competence. This will give those outside parties confidence to work with you, give you that loan, get you that big client contract, right? And one of the more important things, keeping Uncle Sam off your back. Now we're going to go into a little more depth. So this is still a 101, right? Because we're talking to startups, people getting into business. So I'm not going to go into too much detail. So I'm going to keep it basic. But so the basics of reading your financial statements, and it starts with your P&L, right? As an accountant, I start with the balance sheet. But as a business owner, you're going to start with your P&L, right? And this is important because it provides an overview of your company's financials and your performance, revenue, expenses, and profit. So we put these guides together, and at the end of the presentation, I will provide everyone my email address, and you could reach out to me directly, and I'm happy to send these to you. So this is just a basic of how to read your profit and loss statement. So it starts with income and revenue, right? Tomato, tomato, you can call it whatever you would like. But in this example, we have a furniture store. So here you see different revenue streams, chairs, tables, sofas, and it's broken out. And if you're a service-based business, you could put all these different services that you offer, and you want to break those out into different revenue streams. For instance, my firm, I literally just have one revenue item. I really don't care to break it out into more detail. So it could literally be catered to your wants and needs. All right. Below revenue, you have COGS or costs, right? Cost of goods sold or cost of service. And this is expenses that go directly into providing, selling into your product or the service that you're providing. So in this example, it's literally the cost of the chairs, the cost of the tables, sofas, the direct labor could be here, right? Say you own a cleaning service, you would maybe put your direct your labor there and your cleaning supplies and products. So then after that you have gross profit. So gross profit is simply taking your income, your revenue, subtracting it from your COGS, and that gets you to gross profit. All right. And then below that, you have operating expenses, which I like to call operating expenses. These are things like rent, your non-direct salaries, right? Utilities, marketing, dues and subscriptions, office supplies. All of that would be operating expenses. All right. And then below that, you do tend to have an other section, which unfortunately my guide does not have that. It's something we'll add. But that would be like other income, and that could be interest income and other expenses, and that would be depreciation on your assets, and some licensing and taxes. Those would be considered non-operating. The licenses is arguable, depends on what kind of license, but nonetheless, you have some non-operating expenses that would go into the other section. So then to get to your net profit, you would subtract your gross profit from your operating expenses, and then ultimately add back any of the other income, subtract any of the other expenses, and that gets you your net profit. So in a quick glimpse, here you have a working P&L. Right, and this is something that you should be reviewing on a monthly basis and then comparing it to previous month, previous year, right? And you could maybe you do the whole quarter and compare it to last year, the same quarter, right? Then you could really get analytical. But you need to just start with the basics on making sure you're doing your monthly bookkeeping in order to even be able to generate your P&L. Right? After that, we have our balance sheet. So this is where accountants sit more, but nonetheless, why a balance sheet is important is because it provides a snapshot of your company's position in a specific point in time. So assets, liabilities, and equity. And same here, I have a very simplified guide on how to read a balance sheet. Let me just zoom in a little bit there. All right, so you start with your assets on top, and we're going to get into more detail here shortly. You have your assets on top, then you have your liabilities, then you have your equity, okay? And it's assets minus liabilities equals your equity. So let's talk about the assets. You have current assets that are on top. This is your checking account, savings account, money market account with interest rates. Now you're seeing a lot of money market accounts, and maybe petty cash, accounts receivable. If you invoice your clients, right, and you have them on terms, net 15, net 30, you would have an AR. If you sell inventory, that would be your inventory would sit in current assets, excuse me. And then there's an other current assets, could be things like prepaid expenses. Then below that, you have non-current assets, and these are your fixed assets, right? So for instance, a property, a warehouse, equipment, a vehicle, goodwill, right? So that could be like maybe you have a logo or a patent that could sit as a non-current asset on your books. All right, and then this is a quick snapshot of the asset in our example here. And so this company has total assets of 195,000. Then below that, you have your liabilities, right? So now comes your liabilities, and same here. It's broken up between current and non-current. So identifying short-term current liabilities would be your accounts payable, so any vendors that bill you on terms, okay? Your credit card, your balance of your credit card would be a liability. Any taxes payable, sales tax, salary tax, right? Payroll tax, I should say. And any accrued expenses would sit on the short-term current liability section. Then you have your long-term liabilities, and those are your longer-term loans, right? So maybe a loan on your property, would be a great example, or your vehicle. Deferred revenue could sometimes be a long-term, but that tends to actually be more of a short-term. But nonetheless, it would be your longer-term loans would be the non-current liabilities. So again, and then in this example, we have here's a short glimpse of it. And so this company has $72,000 of liability. So then comes equity. And again, we could have done a better job with having more example for the equity, but your equity would be your initial contributions into the business, right? Then your retained earnings, which your retained earnings is from your net income, from your P&L, your profits, right? Becomes your then it gets moved over to the balance sheet as retained earnings. Your distributions, money, equity that you pull out of the company, that would be all in the equity section. And in this example, this company has $123,000 of equity. So in the School of Accounting, we're taught assets equals liabilities plus equity. But the equation is the same. But what I like and what I think sticks more for entrepreneurs, at the end of the day, it's the same result, but assets minus liabilities equals equity, right? Because as business owners, we want to build equity in our business. And then so here we just have, again, the balance sheet summary. Here's the assets section. Here's the liabilities plus right there, the equity. Then we get to the 195, similar to the assets there. So this is a healthy business. It has positive equity. So nonetheless, that's what we're looking for there. All right, back to the presentation, back to the slideshow here. Next, we have cash flow. I have yet to make a guide on the cash flow, but we'll just talk about it in the slide, right? Cash flow tracks all inflows and outflows of cash in your business, right? So that's anything from operating, investment, financing. So that means literally anything that all cash related items that flow through the P&L and flow through the balance sheet. So net cash inflows, this records all cash entering the business, so your revenue, right? Any investments, maybe outside investments and loans that you've maybe given out, right? These are all inflows. Now, then you have all outflows, and this is all your expenses, right? That hit your P&L. Then loan repayments, for instance, right? When you have a loan, you're paying, some of it is on interest, so that goes on your P&L, but the principal is not a P&L item. It's not an income statement item. It stays on your balance sheet and it reduces the principal. So that would be a cash outflow, and any investments that you might be repaying, right? So that's the outflows. So then you're looking for a net, right? So inflow minus outflow equals your net cash flow, and you're looking for a positive number, obviously, but not all positive numbers are created equal, right? Because you could have a positive number, but it means maybe you took a $10,000 line of credit, right? So just because now you have a positive cash flow, that doesn't mean it's necessarily a good thing either. And when if it was literally a line of credit to just keep you afloat because you're drowning, that's one thing. But if it's a line of credit to help you fund your next inventory because you're just flying through inventory, that's another thing, right? So it does depend. All right. So that's the 3 basic financial statements. You need to learn these, and you need to be generating these on a monthly basis. And it starts with bookkeeping. You need to start with the bookkeeping first in order to even have to be able to generate these financials. And once you have those nailed down, and you're keeping up with them monthly, you're reading them monthly, then you could get more analytical, and that would be KPIs, right? Key performance indicators. But again, I wouldn't even move to KPIs if you don't have your basic financials nailed down, right? And so this could really depend by industry. I'll try to generalize it the best I can, and the list that I'm about to show, it's definitely not limited to this. You could go crazy with KPIs, but we'll just go with some general ones. So the first is expense percentage of revenue. I love this one. This is one I always start with clients. So this would be, think of a P&L and all your expense line items, your COGS, right, and all your operating expenses. You would divide each expense by the total income, and now that gives you a percentage. So for instance, let's say you have a business doing $1 million in revenue, and your wages, salaries are $100,000. 10% of your revenue is wages, right? So now the following year, let's say you do $1.5 million in revenue. In theory, your salary should be $150,000. Yes, it will go up obviously naturally from a dollar standpoint, but from a percentage standpoint, it should stay the same. And let's say it doesn't. Let's say it's $300,000. So now it's 20%. Well, why? Is it justifiable? Were you understaffed the year before, or are you overstaffing now? Right? So it will help you answer those questions, I should say. Next is revenue by employer or subcontractor. This is a great one as well, right? For the attorneys, knowing your settlements, PI attorneys, for instance, knowing your average settlement per attorney is a great one. Or subcontractors, say you are a construction business, right? And you do various different projects and you have different subcontractors on different jobs. You should be doing job costing and knowing which contractors are making you the most money, right? And then obviously maybe promote them, get them more jobs, things of that nature. ROI on advertising, we touched on this, right? You shouldn't be just throwing money blindly into Facebook ads, into Google ads, print ads. You really need to know where are you getting your customers from, and then that way you could double down on what's working and turn off what's not. ROI on equipment, let's say you are a landscaping business, you bought a big lawnmower, for instance, right? You want to know, when are you going to break even on that lawnmower? When are you going to start making money on that lawnmower? Profit by customer job. Again, this is a great one. I use it for my firm, knowing how much we're making per client. But going back to the construction company example, right? For instance, you should know exactly which project, how much each project is making you. We have a contractor client, and literally he was all about building decks from scratch. He's like, that's what I want to do. And then after we dove into the numbers, he's actually more profitable just staining decks rather than building the decks from scratch. Like in his mind, it's like, oh, I got this big job. I'm building the deck from scratch. But yet he's not making as much money. It's more time consuming. It takes more resources to build that deck from scratch rather than just staining decks. So, and that's way better margins, takes less time, takes less energy. So he started advertising more on just staining decks, right? Billable versus non-billable hours. Again, attorneys, your B2B businesses. This is a great one. This is one that my firm struggles with. Well, not struggles, but we're always looking at it. How much of our hours is spending time on billable versus non-billable? Inventory cash conversion cycle for those companies that have inventory. How long is that inventory sitting on your shelf until it becomes cash, right? And this will help you with your reorderings. When will you need to reorder? Debt to income ratio. This one's a big one for banks, right? This is what they look at if they're going to give you a line of credit, a loan. So just how much debt do you have relative to your income? And again, this is not even scratching the surface. There's so much more than this, but it's a good start. So next, right, I'm going to talk about some of the softwares to help you accomplish this. In today's age, you really need to be on an accounting software. Yes, you could start off with a spreadsheet if you have a side gig, right, a side hustle, and there's not that much activity. But the first solution I'm about to give you, it's 100% free. I really couldn't rave more about this accounting software. It's called Wave Apps. Literally Wave Apps, apps.com. And it's 100% free, unless if you use their merchant services. So if you're invoicing clients through it and they're paying through the portal, then just like any other service, they're going to charge you for a credit card processing, ACH processing fee. But other than that, it is free. And so we have majority of our clients are on QuickBooks, but we do have maybe 5 to 10% of our clients on Wave Apps. And we have a martial arts studio, we have health coaches, rental properties that we run through here. I run my own rental property through there. It's great. It's going to give you a P&L, it's going to give you a balance sheet and a cash flow statement. It's not as robust as QuickBooks, right? The reporting is still limited, but if you're if you're doing nothing, this is definitely a great solution. Then we have Google Sheets, right? So if you don't want to pay for Excel, jump on Google Sheets to help you with some of that more reporting that you might be looking for, some of those KPIs that we were talking about. Then I'm a little biased when it comes to QuickBooks, I must say, because like 90 to 95% of our clients are on QuickBooks Online. I love it. Yes, the pricing has been going up. But I think you still get your value for it, to be quite honest. And it's a must. It's a must if your business is scaling, growing, and because sooner or later you would outgrow Wave Apps, right? We've had clients that we started on Wave Apps because they were very cost sensitive, and then we had to move them as their business was growing. We had to move them to QuickBooks Online. And then so now QuickBooks actually has 4 different tiers. And they just added the 4th one, and it starts at $10 a month, right? So again, that's really, it's cost effective at that point too. Then, you should be using Excel. If you're not using Google Sheets, then use Excel. Yes, that's a paid version. But again, right, to help you with some of the reporting, you should be using these tools. Going back to, well, hold on, sorry. So yeah, just quick, right? This will help you save time. It's going to help you stay organized and give you accurate reporting. But just like anything, right? What you put in is what you get out. Data in, data out, right? So as long as you're keeping up with the bookkeeping or delegating the bookkeeping, and reconciling the books on a monthly basis, then yes, your reporting will be accurate. But if you're not keeping up with your bookkeeping, then don't expect your P&L and your balance sheet to be accurate. So going back to, us letting the businesses run us rather than us run the business, right? Working on our business rather than in the business. Yes, you should be delegating this ultimately, right? But you need to learn the basics first, because you need to have that conversation with your bookkeeper and accountant, and you need to know what you're looking at. So start with understanding it and learning it, and then yeah, I couldn't agree more. Like delegate it, right? delegate those tasks so you could grow your business, get clients, right? Create systems and processes to scale your business and doing all those things. But you should learn the basics. Like one story that I had, I have an annual attorney client, and we spent about like 8 hours cleaning up his books. And I told him, like, why not just retain us on a monthly basis and we'll keep these up for you? And he goes, no, I don't think I could afford it. And he can, because I see his financials, but I wasn't going to argue that. And I told him, well, at what point do you think you can? How much more revenue would you need to be able to afford us? And he said about $100,000 more. And so I tell him, hey, well, how many hours are you spending on bookkeeping and doing your own bookkeeping and accounting? And he goes, about 4 to 7 hours a week. And I was like, well, maybe if you spend the 4 to 7 hours a week on getting more clients, you get that $100,000, right? Rather than focusing on your own bookkeeping, because he's already like, he gets P&Ls, he knows how to work his QuickBooks, so he's past that. So he's at a point where he needs to delegate it. And a light bulb went off in his head, and we're going to move forward on a monthly reoccurring basis with him. So in closing, I know all this, and again, this was a quick high overview, starting with the basics, and I know this alone could still seem very overwhelming. But remember, you started a business. That in itself is a difficult journey, and it could be an overwhelming journey, right? So do not get overwhelmed by this. If you started a business, I have all the confidence in the world in you that you could begin to learn the basics of accounting. And remember, accounting is the language of business. So as an entrepreneur, you really need to you need to learn that language, right? So here's my contact information. Take a snippet of it or a picture. Don't hesitate to reach out to me, email me, call me. You can check out our website for more information. We have a lot of free resources on there. And then I believe Devin wanted me to just talk about some of my favorite books, and
I'll jump in. So we do have, before we do the favorite books, we're doing just a quick Q&A session. If anybody has any questions, and if you either have plenty to think on, plenty to chew on, or if you don't have any questions, by all means, it's certainly optional. But just as a quick reminder, if you have any questions for Andy, you're always welcome to. He already provided his contact information, but you're welcome to reach out to him one-on-one if it's more specific to your business. But if you do have a question for now, couple ways that you can provide that. One is either if you're in the Zoom meeting, you're welcome to just ask that via the video. If you're in the LinkedIn Live portal, you're welcome to stow that in the comment section, and then I'll make sure to keep an eye on that, and then ask Andy on your behalf. But we'll pause for just a few seconds here. If there are any questions, by all means, people are welcome to ask and throw those up. So we'll give it a few seconds. If we don't hear anything, then we'll move on to the favorite podcast or book that you recommend. So I'll start the timer. I usually give it about 10 seconds, and I always go by if you can either speak now or forever hold your peace. So we'll give it a few seconds, see if anybody has any questions, and then go from there. All right. Well, that's speak now or forever hold your peace. And I guess everybody gets to forever hold their peace. But definitely, if you do have questions pop up, reach out to Andy and he'll be able to give you some one-on-one advice. And so now with that, just to your point, Andy, so I always love to wrap up. I always caveat it with, I am a big lover of reading books, but I don't read books. And so by what I mean is I always love to I like to listen to them. So I run quite a few hours a day. So I'm either listening to audiobooks or I am listening to a podcast. And so I'm always looking for both, if it's business related, all the better. And if you have things that are on the business side that you would recommend, by all means, feel free to recommend that. Or if you're saying, hey, I've got this great book or this great podcast that has nothing to do with business, but it's still a great one that people can check out. I'll turn it over to you, Andy, to share a little bit about favorite or recommended podcast or book.
Yeah, most definitely. To my own admission, I wish I was reading more recently, but as it's busy season and my firm has been growing, I've been reading less. But one of the books I love that actually helped me scale my business is E-Myth, by Brian Gerber. Yeah, Brian Gerber. It's a great book, and he talks about scaling your business, right? Systems and processes. Highly recommend that one. And the other is a classic by Dale Carnegie, and it's How to Win Friends and Influence People. That one's always a great read. I think I've read that one 3 times through now. And I'll add one more in there because it's a very short read, and you could read it literally in like a day or two. The Richest Man in Babylon. It's a great one, and it's a classic. Would highly recommend that one as well. Then as far as podcasts, I'm more of a YouTube listener, right? So I'll like throw on a YouTube video and I'll listen to it while I jog or I'm in the car. And Ed Milet is a guy I love to listen to. He's a very powerful source. He's in the insurance industry. That's how he grew his wealth. But he just talks about life in general. You know, the difficulties of being an entrepreneur. We're all in it together, right? Some of these issues that you have, you think that nobody else went through them, but most likely they have, right? And he's just very humble in his way, for just in being, in the position that he's in. He's very humble. So Ed Milet is a great listen to. He does some great interviews. He does some great solo videos. Highly recommend him.
Awesome. We gave some great ones, and some of those I've had a chance to catch up on, or to listen or to read, and others I'll have to add to my list. Definitely sounds like some great ones. I love the E-Myth, and that one's definitely a fun read, and is interesting, as well as I think done well, as entertaining. So with that, now as we do wrap up for today's webinar, couple reminders to the audience before we just remind them how to reach out to you, or to you. But we do try and do about a once a week or so webinar, and so we are actually probably rebranding the name just from Inventive Webinar to Inventive Fireside. We just like the fireside chat kind of an idea. So if you see that change, it's still us. We're just changing the name slightly. But we do have our next webinar that is coming up, and we're excited for that as well. And that is coming up on March 8th. So that will be at 1 p.m. or 1 p.m. Eastern, 11 a.m. Mountain, or 10 p.m. or 10 a.m. specific. I always have to think about all the different time zones, because we have a good audience across the board. But that will be with Jeff Wallace. He does a lot with incubators, with Silicon Valley in your pocket. Is a great connection as far as with a lot of investors. And we're going to be talking a lot about how you can get to the people you want to talk with. And that's one of the difficulties with the business is a lot of times you're trying to figure out, hey, I can never reach out to the CEO of Apple, or how do I get in contact with the people at Home Depot to sell my product, or that. And a lot of times it seems insurmountable, but if you're to join in and listen in, Jeff will give some great information on how you'd actually be able to connect with them, get to the people you want to talk with, and help your business. So it should be another great one. Make sure to just RSVP, join there, and we'll definitely looking forward to that. And so that's just kind of a quick teaser. And now I'm going to turn it back over to Andy. And you already provided your information with the slideshow, but for those of the people that missed it, or they want to reach out to you, just one more chance or opportunity to remind them they want to reach out, and they want to be, asking a one-on-one question. They want to be a client. They want to be an investor. They want to be your next best friend. Any or all of the above. What's the best way to reach out to you, contact you, find out more?
Yeah, the best way, I'm going to reshare my screen here, is my email address or phone number. Feel free to text, call me, or email me directly on my email address. I know it's a long one here, so take a snippet of it or a picture of it. And then solutions is with a Z at the end instead of the S. A lot of people tend to get that wrong. And then there is a hyphen in the middle there. But yes, that's the best way. I reply relatively quickly, so do not hesitate.
Awesome. And I'd maybe invite Andy, if you could, to just throw that in the comments section on the webinar notes as well. And then that way people can grab that there as well. If you want to throw that in there as a quick way for people to connect. And with that, we'll go ahead and wrap up this webinar for the week, and definitely appreciate all the knowledge that Andy shared, helping people to know their numbers and to make sure that their business continues to thrive and be profitable. So definitely was a great presentation and a great webinar. Thank you for all those that joined, and look forward to next week, where we're going to be sharing a lot about how to get in contact with those people to help and build and grow your business. And until next week, good luck with everything, and have a good one.
Yeah, thank you. Let's do it again. Thank you.